What is up, Aces? Welcome to the next installment of our Ace Crypto Beginner's Guide. In this video, I will be covering trend lines, what they are, how to draw them, why we use them, and I will be giving you specific examples on how to trade them. As a trader, when you are observing price action, you will notice that it is always doing one of three things. It is either moving sideways, trending upwards, or trending downwards. During these periods when the price is trending, it doesn't matter whether it's to the upside or to the downside. This is when you will be presented with the best possible trading opportunities. And the reason why is because during a time when the price is trending upwards, this is when you will get more explosive moves to the upside, and vice versa when the market is trending downwards. If you are looking to short the market, you want to do it in a downward trending market because moves to the downside will be more exaggerated. All right, let's jump right into it. So the first thing I want to explain is what is a trend line. A trend line is another form of a support and resistance line. However, instead of moving horizontal, trend lines move diagonal. And the reason why is because trend lines are formed during periods where the market is trending, either to the upside or to the downside, okay? So trend lines are formed when you have connections between swing lows and swing highs in a trending market, okay? So for example, this is the price of Bitcoin, okay? This is on the weekly time frame. And you can see clearly that this is in an uptrending market, okay? You can see that very clearly right here. We have a low, and then we have a higher low, and then we have a higher low over here, and another higher low right here, okay? So you can see that this is forming higher lows, okay? It is trending to the upside. And then the same thing on the highs. So you have a high here, and then you have a higher high right here, and another higher high over here. Okay? This is forming higher lows and higher highs. So this is called a trend. This is an uptrend. Okay? So when you are forming a trend line, right, you want to identify the swing lows and the swing highs, in this case to the upside. Okay? So let's say we want to start with this low right here. Okay, this is a good area to start off. So that's a low. And then you have a higher low right here. Okay? So when you this is trading view. When you go to the left-hand side, you will see this toolbar. I want you to click this line indicator right here. And when you click it to the right, it will give you options and you will have trend line or red. Click trend line. Let's start off with this one. This one's easier. So when you draw the first low of this trend, this is the swing low. And when you connect it with the next swing low, this will give you a trend line. You see? When you're drawing the trend line, you want to have a minimum of two anchor points, okay? You want to have a minimum of two. And when you're drawing these, you can either do it by the wicks or you can do it by the bodies of the candle. So let's say I wanted to do this with the wicks. So this is the wick of this low right here. And then you would connect that with, then you want to connect that with the wick of this low right here. Okay. That will give you this trend line right here. You can also do it with the bodies of the candles. If you do it with the bodies of the candles, that would start down here. And then the trend would look something like this. This is how the trend line would look. It's up to your preference what you want to do, whether you want to do the trend lines with the wicks or with the bodies of the candles. However, one thing I recommend when you are doing this is to be consistent and don't just conform your trend lines depending on your bias, right? Be consistent. If you'd like to do it with the wicks, stick with the wicks. If you'd like to do it with the bodies of the candles, stick with the bodies of the candles, okay? So the more connections that you have on a trend line, the stronger the trend actually is, okay? So in this case, Bitcoin is dumping right now. If Bitcoin dumps to the bottom of this trend line, like if it dumps all the way down here, and then that would form another swing low, right? So if that would form another swing low right here, then that would be the third touch of this trend line. You see, you would have 1, 2, 3 touches of this trend line. Okay, that would indicate that this trend line is a strong uptrend. All right, you do the same thing with the highs. So, for example, if you wanted to do the trend line to the upside, right here, you would do this wick to this wick, and then that would give you the trend line to the upside. You see? Okay, so now I want to cover why we use trend lines. So when you're using trend lines, it is an indicator on not just, where price is trending, obviously, right? But it also gives you hints to trend reversals, okay? So let's cover an example right here. So in this period, Bitcoin is in a clear uptrend, very, very clear uptrend, right? However, even in uptrends, there are periods of downward price action, okay? So what I mean by that is when you draw this trend line from here to here, clear trend line. However, within that trend, you have a downtrend right here. You see? Even within that trend, even though Bitcoin long term is in an uptrend, you have periods where it is in a downtrend. And if you know how to read and draw trend lines properly, you can identify when breakouts or breakdowns can occur. Okay? So let's do this for example. We're going to go into bar replay mode and we're going to play this back to this candle over here. All right? So we're going back in time here, right? Bitcoin just set new all-time highs. It hit $73,000 and then it started, trading sideways, and it looks like it's in a downward trending market periodically, okay? So if we were trading this during this time and we were using trend lines, I would identify a downward trend, okay? If you're doing by the wicks, it would look like that, and the downward side would look something like, let's say you could do something like this, okay? This is what a lot of people were drawing during this time. This is like a spreading wedge downtrend, okay? You can also do it with the bodies of the candles if you feel more confident. If you're doing it with the bodies of the candles, then the trend would look something like this. You see? That looks a bit cleaner, right? Personally, I like to do the bodies of the candles. That's just me. And the reason why I like to do the bodies of the candles is because the price action that occurs in between the bodies of the candles is where the most volume occurs. So that's where majority of the moves take place, and a majority of transactions or trades take place on the particular asset. So those prices that occurred during the bodies of the candles are more, I don't want to say legit, but they're more reliable, okay? So in this case, right, remember, we're back in time and we're drawing this trend line here. So what can we expect? You had 1, 2 touches on the downward trend line, on the lower downward trend line. You had 1, 2 touches on the upper downward trend line. Okay, so what can we expect? We can expect something like, like this. We could expect, price to come down, hit the support of this channel, come back up, maybe come back down, and then eventually it's going to have to break downwards, or it's going to have to break to the upside. Okay? It's going to have to do one of those two things. It can't trade sideways forever. It's going to have to pick a direction. Now, let's see what happens here. So when you click play, we see price fake down. It came back up, right? Oh, fake down again, came back up. Still trending, still trending. Okay, let's stop right here. So we can extend, now that we have more data points, we can extend our trend line a little bit more. You see? Now we're starting to get a better picture here. We're starting to get a little bit of a better picture. It's still trending downwards, but you had a couple fake outs. You had a fake out down here. However, the upper trend line here still looks, still looks intact. Okay. So let's continue. Still trading, still trading. Oh, it looks like it's breaking out. You see that? You have this trend line, and look, it's starting to break out. It's starting to break out with volume too. Like this is heavily traded candles over here. There's a lot going on. Right? You broke out of the trend. You hit the top of this candle right here. You came back down for a retest. You flipped that trend line into support. Now let's see what happens. It should look something like this. Okay, let's see what happens. Boom, breakout. You see? That is how you identify a breakout of a particular trend. Clearly, price was trending downwards, and then you got a breakout to the upside. In this particular case, if you didn't have your trend lines drawn and you couldn't, and you weren't anticipating a reverse in the trend as it was breaking out above this trend line, then you would have missed out on this potential trading opportunity, on this potential long. Okay. So that was an example on the on trading a breakout to the upside, right? But it also is essentially the same thing when you're doing it to the downside. All right. So we could even look at this. We could even look at this most recent dump. Okay. Price was in an uptrend right here. Let's say you're doing this from the wicks. Okay. So you're forming this trend line from the wicks. Like this. We got two touches. Okay. So we got 1, 2, 3 touches on the lower trend line, and then you got 1, 2 touches on the upper trend line, right? So if we do replay again and we come back over here after those 2 touches, right? Price looks like this. Price looks nice. It's trading upwards, right? It's in an ascending trend. So you would expect price to continue to do something like this until it decides where it wants to break out, either to the upside or to the downside. So let's let it rock out. You see? Came to the lower bound, boom, lost it right there. So we lost the trend line right here. And when you lose this trend line, that is where we got the volatile move to the downside. Okay? So if you would have traded this, the break of this trend right here, you could have caught a nice short opportunity. All right. So that's the basics on how to draw and how to use trend lines. And remember, you can do this on all time frames depending on your strategy. This is the weekly time frame, but when you go to lower time frames like the daily, you can identify more trends within the price action. For example, if you go down to the hourly, right? If you go down to the hourly, you will find many more examples of trend lines. Okay, like you can find a trend line right here. That's a clear trend line. Look, it looks like we're breaking above this trend line. See that? So this was a channel that it was in. It was trading in this channel, and look, it looks like we're breaking out above it. Okay, so this might be a nice potential long opportunity. And then if we break back inside the channel, you can exit your position. But you never want to, I just want to make clear, you never want to enter or exit trades just based off of trend lines alone. You want other areas of confluence. So whether that be, if a trend line corresponds with another level of support and resistance. Let's see if we can find an example here. So again, back to this little breakout right here. So this is just an example, guys. This is just an example. So this looks like it could be a potential long just for the simple fact that you have 2 confluences. You have a breakout above the trend line, and then as it broke out above the trend line and came back to retest, look, this is a level of support right here. This is a horizontal level of support. And we got that bounce right off of here. So now we're getting a bounce for Bitcoin right here. So that's 2 areas of confluence. Ideally, like when I'm entering a trade, I like to do, I like 3 or 4 confluences when I'm entering a position. This isn't enough for me just to enter a trade, but it's looking good. It's looking good so far, and it makes sense why Bitcoin is getting a bounce there. When you're doing your trend lines, let's say you're doing this on the weekly time frame. You want to make sure that your trend lines are visible on the chart that you're looking at. So like if this is an example of a trend line, you can go here to the toolbar, go to visibility, and choose the time frames or the intervals where you want your trend lines to be shown. So if you only want it on this interval only and not to be visible on all your lower time frames, that's how you do that. You can also adjust it where you want it the current interval and below. Then you'll start to see that trend line on the daily, on the 8-hour, 4-hour, etc. I like to keep it just on the interval that I'm looking at, just so my charts stay clean and they don't get all messy when I'm perusing through different different time frames. Okay. And another thing I like to do too is when I'm doing my trend line, sometimes I also like to do a ray. So when I'm over here, I like to do ray because when you do that, you can it's easier to anticipate where the trend line might be in the future. So like if I know that Bitcoin has been in an upward trend for a while, I can just leave this ray that I put here and just let it ride out. So I can, as price action evolves, I can anticipate, okay, if price is going down, I could expect it to maybe come down here. And then price goes up, and then I could expect it maybe to come down like that, right? So I could identify in the future when this trend line would continue. That's if you do it with the ray. Sometimes I like to do like that. It all depends on your preference. But all right, I hope you enjoyed this video on how to draw trend lines. If you have any questions, hit me up in the chat and let's ace it.